Hey guys, Dennis Wilborn, active trend trader. Did you know you could be losing a lot of money in your trading if you're trying to make bullish trades on bearish charts? What do I mean by that? Hey, watch today's video and find out what we're talking about. But first, before we get into the video, check out up there. I'll have a link that will take you to our AutoPilot trading service. It's doing phenomenal. We're beating the S&P by about 17% so far this year. And we also have 3 stocks that you're going to want to get on your watch list. But guess what? Don't buy them yet, okay? Don't buy them. Not yet. They're not quite ready. So let's get on to today's session of Trade Your Way to Wealth. Let's go right now. Okay, good afternoon, everybody. This is Dennis Wilborn. Welcome to Trade Your Way to Wealth and Financial Freedom. We're going to be talking about some stock picks and some trading tips. But first, Anil has an announcement. Yes, Anil.
Yeah, we have a meetup coming up here, 6:30 Eastern Time, this coming Thursday, the 17th. It's going to talk about how to improve your performance using the Delaware focus list. We have some cool new things.
Okay, cool. And that is the Delaware IBD meetup group. If you're not, and I remember, you can find that online. Anil, I will also put out the invitation to that when Anil sends it out, so that you can come and take advantage of that. So awesome. So welcome, Steve. Welcome, Anil. And
be here.
Isn't it kind of crazy? I come away with one big question is, and I'll be asking this at the beginning of the video, which is something that I'll tape afterwards. But in answering this question, the question that I asked was, are you on the wrong side of the trend? Are you trying to trade bullish trades on a bearish chart? And I'll throw that open real quick to just a little bit of discussion between Anil and Steve and myself. Guys, I know that in my past history, I always get myself into trouble when I'm trying to make bullish trades on bearish charts, and I'm much better off if I will, in other words, trade with the trend.
Yeah, and that's my experience also. I try to trade the trend. Of course, it's easier said than done. It's what time frames you're looking at and what is your style of trading. So the big answer is easy, but the details kind of are challenging.
Yeah.
And for me, I trade mostly on the daily charts, so I'm looking for a bullish environment.
Okay. What about you?
In the market when I put on trades. And
what about you?
We're very close to being bullish. I'm sorry.
Okay, no sweat. At the same time, you have to be very careful in over-anticipating, because I know in my experience, my eyes can sometimes fool me into seeing what I think is bullish and acting on it, and I wind up having the knife stuck deep in my back. Anil?
No, I'm basically the same way with slight difference. My system tries to find fundamentally strong stocks that are in confirmed uptrend regardless of the market.
Okay.
And in that case, when the market is really bad, it's difficult, so I have to use very tight stops.
Yes.
But I do find stocks that are really going up. They're turning with the market. The system surfaces the right stock.
Right.
But you have to be careful.
Yeah. And one of the point that I'd like to, share with folks is that when you find yourself in that kind of environment, look for the strongest stocks, even though the market may be weak. But be aware, if you get in early on that fundamentally sound stock that is, let's say, above all its moving average and actually much stronger than the markets than the indexes themselves, that those individual stocks that are gaining momentum have to carry the inertia of, or let me rephrase it, they have to carry the weight of the rest of the market. So they will sometimes basically, their potential move up can be retarded because of the weight of the market. So good.
Correct. And that's the challenge in trying to really be in sync.
That is, yeah.
And in a market turn, it's hard to be in sync.
Yep, without a doubt. And so the thing about it is just hang on. We are going to be getting some really great trades. Just be patient, and just wait. And one of the things I learned from Floyd Darman is that basically wait for the longer term momentum to shift, especially if it's been completely beat down like we have right now. Once it starts to shift, that's when some of the better trades start coming up, and we can be on for a long term. So today we're going to finish up with our market index review, market correction, stock picks of the week by our elite traders. And we just covered one of the trading tips that I wanted to ask is just what do you do? If you find yourself hitting these little losses over time, time and time again, oftentimes it may be because you're trying to make bullish trades in a bearish market, and you're getting, you're dying the death of like paper cuts. You're dying the death of 1,000 cuts. So, hey, I will. My only call to action for you is if you're joining us, please invite your friends to join with the active trend trading members as we watch, as we do these weekly videos. You can join over on the YouTube channel, Market Tech Talk. And there'll be a link down below, in the comments on the Market Tech Talk to join up over there. And you can also take advantage of the really great tutorials that are over there. So I like to think of simplicity is the ultimate sophistication. That was a quote by Leonardo da Vinci. And one of the ways that, we do stay simple is try to block out the noise of what's happening on the financial networks. Because all the things that are on the financial networks, and not all of us, the majority of them are meant to elicit an emotional response from you. Freud said that once we get our emotions involved, our IQ goes down. Therefore, if we're emotionally involved with what's going on with the market, we'll make dumber mistakes. And so that's kind of like it. That's it in a nutshell. So one of the ways to do that is I prep my trades after hours when the market's closed. I'm not influenced by what's going on. Here of late, I have been only looking at the market in the last final hour of the day. That's all I need because everything up until the last hour of the day, for me at least, is noise. And the distraction of noise will kill your profits. So here's where we sit as of about 9 p.m. this morning, 9 a.m. this morning. Here's where we were last week. Here's where we are now. As you can see, up about 7% for the year so far, and we're beating the S&P by double digits, up almost 18% over the NASDAQ. I'm going to jump over and look at first the get it situated here. I'm going to look first at the S&P, the spider. Okay, when I say we're trading on the wrong side, if you're trading on the wrong side of the market, one, all of us are sitting there looking for where are we going to bounce? Where are we going to bounce? Where are we going to bounce? And we're looking down when maybe we should be looking up. If you look at what's happening with this market there we go, is all the moving averages are what? Pointed down. Price action is below the 200-day moving average, which is right there. So in reality, we should be looking up for where are we going to, what level will we reach before we go down again? we may be in a situation right now where we got up to the 8-day moving average and we are reversing down lower with the downside target being down here. Any long trade you do right now with the indexes is a counter trend trade. You are trading against the prevailing trend of the market. And so whenever you do that, you have to be very, very careful. You basically take less profits and keep your stops tighter. So the spiders, I do like it to the, as Steve was saying, yeah, it is going to be shaping up and providing us some bullish opportunities. But right now, folks, we have, even on the longer term, this is looking really very weak. We've had the 8-week moving average, which is approximately the same as the 50-day moving average, cross below the 20, which in the 20 is just, that right there, if the 20-week crosses below the 40-week, that is a death cross, meaning that we could be projecting some more downside on the spiders. Momentum, as I said earlier, momentum is doing what? It's going down, 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 and it has on the weekly basis. And so, is it viable? Right. For me, no, not right now. A matter of fact, I'm almost convinced that what may be a better trade, I take that back. I wanted to get back up here to the 20 before I'd look at a move down. To try to take a downside trade right now, it is too late. And since I'm right at the 8-day moving average and moving down without a bearish reversal signal, that would be in the what I consider being in the basically in no man's land, and that's where you're going to get chopped up and spit out and take some losses you don't need to take. So that's what we've got with the S&P. S&P is stronger though than the NASDAQ. Now, NASDAQ's given us a really good bounce right down from the 8-day moving average, continuing to, it may still move back down here and retest. And so what I'd be looking at this is if we close where we are right now, I'd be looking for some kind of a retest on Monday, pulling back up into the midsection of today's big candle to then take it to the downside. Or I would look for a potential trade off of the moving average and the 20-day moving average and the 20-day moving average. Where would I, at the earliest, I would be looking for, based on a price action standpoint, the earliest I would be looking for a potential bounce would be if it gets back down into these past levels here. Now, could it reverse before it gets down there? Sure it could. But those long wicks that we see there, that's where the buyers came in and defended that territory, pushed the prices back up. But as you can see, the sellers have come back in and are driving things back down. We do have a 2-line cluster on the on the daily chart on the market forecast. However, the momentum weekly or daily is just sideways. It looks like we have a 2-line cluster on the market forecast for the weekly. That's a good news, but it can test a little bit lower. And so, but what that typically means is somewhere between 1 and 4 trading periods, and this is on a weekly chart. So somewhere between 1 and 4 weeks, we could get a reversal, and that reversal could be from a lower level. If we slip through the 316 level, look for the 294, and that may be where we get, that may be where we would get our potential bounce. And then I'm going to reserve the IWM for just a minute. I'm going to go back over, and this is the stock that Anil, you ready? This is the stock that Anil's looking at. Mohawk Group. What do you tell us about it?
It's Molina Healthcare.
Molina Healthcare, yeah.
Oh, it is.
Yes, and
I'm sorry.
it's going to be number one on my Delaware focus list this weekend. It meets the strictest fundamentals and technicals,
Okay.
and it is on Market Smith blue dot. That means accumulation in the base.
Okay. So do you buy it right here? Do you wait for a pullback in? Because I was looking over here on the weekly chart, and it's had 1, 2, 3 weeks in a row where it did sell off a little bit midweek and then rebound. So do you buy it right here, or do you wait for, maybe a retest about the 306 level?
No, I buy it here right now, and I put a stop at around 300.
Okay, awesome. And let's give a you from where it's at right now, and a stop about 300, which is just below that. Yeah, it's less than 5%, guys, and so that's a good solid potential. And so, anyway, so what do you think, Steve?
I like it. It's a hot group. It's been very strong the last few months.
Okay.
And I like it right here. I pick up more if there's more of a pullback.
Okay, cool. And what kind of volume does it do that was a big buy day. Big buy. Look at that volume on that.
Yeah.
That was 13 million shares, and normally its average is about 600,000 shares. So that looks very interesting.
There's some others in the same sector you can also consider. United Healthcare is one.
Okay,
Yeah, that's a good one.
And I think that's
Corporation of America.
I think that's UNH, right? United Healthcare.
That's correct. Yeah.
UNH or UHN?
UNH.
UNH.
I got it. So, yeah. So as you can see, it's kind of range bound right now. Breaks out the top of that range, though. You've got a kind of a nice move of about. There's 500. There's about $50 to the upside. Excellent. So Steve has a pick, but he didn't want me to show it to anybody. No. Here it is.
I'm actually following it. I don't think it's an entry necessarily today. You could.
I agree.
An aggressive entry, or I would wait a day or two.
Okay.
So I think it's been a perennial, fairly high up on the IBD 50 list for the last about 4 years.
Right.
And I think it's had a large sell-off, and I think it's a sort of a bottom fishing pick. I think it's maybe a buying opportunity developing right now.
Okay, I like it. Yeah, I mean, it's got clearly you have a well-defined bottom here at about 210.
Right.
By those wicks there, and so I've been having, with the market weakness, I've been having very good fortune in target shooting my entries, shooting at the bottom of the wicks or towards the bottom of the wicks. It puts me closer to my stop out. So it helps me, protect my capital, which works really well also. The other thing you could look at, of course, is, look from where it's at right now, price action right now, it's got a lot of resistance up above it, a lot of overhead supply in this case, as you can see there by the moving averages. So again, somewhere middle of the wick, or even down retesting here, that looks good. And so, okay, NVDA, I like it. I am also watching NVDA. It's one of those that falls in the category of some of the other strong, what have been strong stocks in the past, is the momentum the longer term momentum just has not shifted yet. So IWM. The Russell. The Russell is very, very similar on a weekly chart. We did get a crossover to the upside, which is different than the other two. indexes that we follow, we know we have a good level of support down here, about the 190 to the 195 level. We had a bullish reversals inverted hammer here on that was Tuesday of this week. However, price action has jumped up to about the 34-day moving average and then reversed today. This would not, even if we close a little bit lower, that would not be it would be an engulfing pattern or engulfing candle that's bearish, but since it's not at the end of a definable uptrend, it would not be considered a bearish engulfing, if that makes sense. I'm kind of liking this, though, to just keep an eye on it and look towards the middle of the candlestick for maybe Monday or so. If we get up to there and then it stalls out, or if it stalls out, oh, I can draw a line across here also. When you've got a couple of different trends going on here with, and you can see on this secondary trend line, it just about got up to that today. So anywhere from today's higher are the midsection of the candlestick. That would give us an opportunity to maybe take a trade to the downside with a potential target down about 190 to 188. And then on the flip side of that, if it gets back down there about 190-ish to even the 188 level, that would give us a potential to make a bullish trade. So that's what I've got on the indexes, guys. What do you think?
The analysis is right on.
Yeah, I pretty much agree with you.
Okay.
We're in a window where the market's trying to decide it's definitely bullish or going to roll over.
Yeah.
It's not made the decision clear to us at this point.
I mean, and it's clearly where it is right now is kind of like in the meat grinder area. It's the way I like to call it.
We're right at the cliff edge. We could fall back and be safe, or we could just head on over.
Okay. So, hey, here's my stocks for this week, or at least, and I am going to throw out a couple of them. One is Zim. Zim continues to act very nicely and well as it pushes on to higher highs. Where would I want to pick up Zim, though? Well, what I would do is over the last 1, 2, 3 weeks, what's happened? Zim has pulled back to the 8-week moving average. The only question is where will the 8-week moving average be next week? And the way to figure that is just basically take the 8-week moving average value today, subtract the value from last week, and you come up with an amount there and add that to the value of today. And it tells me that my, if I continue on the same trajectory, my price of Zim will be at the price of the 8-week moving average on Zim will be at $69.52. With that information, then I can zip over here on Zim to the daily chart. Where would that be? Well, that would be kind of back down into this level here. Or I could just say, if it gets down to, let's say, $69.70 or 75 cents or even 80 cents, I could take the top of that body or the 20-day moving average. Let that be my potential entry on a pullback. We're also getting a breakout from that little V pattern there. And so a pullback into $75 would also give you a potential trade setup. The other one that I'm looking at is just Sky. Again, the good thing about Sky is it is above the 200-day moving average. It's trying to make up its mind where it's going to go. I have the weekly charts. It came down and tested in this case, the 40-week moving average, which is the 200-day moving average. What I would look at on this one is just another retest down around that. Let's say about the $65 level. With if I picked it up at 65, my stop loss would be immediately below that low right there. So that would be 62.90. I would go with a stop loss at $62.74. So buy it at 65, and that would be if I bought it at 65 approximately, and you can see that would be about a 4% or so stop loss. So there's the two stocks I have, guys.
I like them. There are actually those couple that I considered today also.
Okay. So again, it's when you do your review over the weekend, if you're not getting our AutoPilot trading service or the Power Rank Elite watch list from me on the weekend, you should at least try to get the Power Rank Elite watch list on me. If you don't know how to do that, I will basically give you my email, and you can basically email me, and we'll get you signed up to get that free watch list. That's on the there you go. And that'll be out sometime tomorrow morning. Remember, going into next week, what happens for us here in Hawaii, we get to get up an hour earlier to watch the market with daylight savings time. And for the rest of you folks, enjoy the switch to the other time. And so that's what we've got today. Any last and final, Steve and or Anil?
Not for me.
No, it was great today as usual.
Okay, thank you.
Dennis, if you can hang on just 1 minute after the meeting.
I will do that. And so let me go ahead and close this out, and we can stop the recording, and then we can chat briefly. Okay?
Okay,
so,
good night all.
Thanks, Steve. Just let me run this through. Hey, remember, everything we do is for training purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. And so we're shooting for 2022. It's a year of patience. It's a year of persistence and consistency. Consistently execute your trading plan, and you will get, hopefully, excellent, consistent results. So aloha, trade well, and prosper. And thank you to both Steve and Anil for being here this week. It's always a blessing. You know, guys, if you have anything you want to send me, a question or anything like that, please email it to me. And just let me know. If you're watching us on YouTube, just drop a note down in the comments section, and I will respond once I get those comments. And again, if you haven't joined us over on the YouTube channel, Market Tech Talk, remember, subscribe and hit the bell, and you'll get the new tutorials that we put up on a regular basis. So with that, aloha. God bless everybody. We'll see you later.
Take care. Bye-bye.
Thanks, Steve.